for staying with us until now. We promised to be quick and punchy and be on and live on time, despite we had less time left. Once again, thanks for our panelists, all of them with huge, great and experience in investing in emerging market, and they are here to look at stock exchange, at our topics, at our discussion from the eyes of, from the most important eyes of investors, eyes of money, and how do we look through those eyes, how stock exchange looks, and how does it, how we can compare the stock exchange in Warsaw to other exchanges. And a few years ago, or maybe 10, 15 years ago, Warsaw was compared with Budapest, with Prague, then in Vienna, and it succeeded as a capital market, as a stock exchange. Right now, it is compared and contrasted with other big markets. We heard the discussion about Istanbul. Investors compare it with other emerging markets. So from this perspective, from Poland, Polish capital market versus Russia, Turkey, other markets, globally, emerging markets in Asia, in other parts of the world, how do we compare and what were the key success factors of Poland when you look at Poland, when you invest in Poland versus the other markets? Nadia, you with your experience of being a portfolio manager at the biggest international investor globally, Capital International, Poland, what was the key success driver here?
Well, thank you very much for the invitation to be here today. I think one of the great success factors in Poland has been the coordination between government policy, the creation of a very deep domestic investor base, which is not the case in many emerging markets around the world, and the development of both equity and fixed income markets, and the coordinated policy looking at how foreign direct investment has been managed into this economy as well. So if you look, for example, at the banking sector here, where the insistence on keeping a portion of the banks listed on the domestic exchange was one of the first steps to keeping a depth in this market that we've seen lost in other markets in Central Europe, also across Latin America. Some other exchanges in the region try to be critical of that policy, saying that we shouldn't see intervention in inverted commas. But I think that that was one of the first steps in making sure that this market remained deep. And we've seen that continued in treasury policy as we've seen privatization. There's very much a coordinated policy which the domestic investor base supports, but the domestic investor base is also critical for. And they still represent over 50% of the Warsaw Stock Exchange volumes. And that is very important and very attractive as a removal of volatility. If we look at Russia, for example, the volatility that's created by the big amounts of capital inflow and outflow from foreigners, where there's relatively little domestic investment in that market. It's a very different picture from what we see here. Poland's not a closed market, as, for example, South Africa, where the domestic investor base is very much more constrained in terms of what it can do, and the domestic companies are constrained because they have had capital controls which have gradually been released but are not completely released. That has been, you know, a different experience. But if we look at the stability of Poland, I would liken it to Chile or South Africa for having that deep domestic investor base, which I think is critical and has been critical for the development of the Warsaw Stock Exchange.
Thank you.
This domestic broad investor base, it pops up in many discussions with international investors. Sometimes I have, this is just my personal feeling, that this group of clients is sometimes regarded as maybe an obstacle to find really attractively valued companies, to really find the true alpha. Do you sometimes have a feeling when sitting in London or Bucharest that you're a bit too far from the market and that local clients are a bit smarter than you, smarter, quicker, and making money in a market a bit more difficult? Grzegorz?
Yeah, okay. Thanks. Now I think it's definitely an issue, and there's general perception that the Polish market is a bit more pricey than other markets in the region, and it's clearly visible when we look at basic ratios. But at the same time, I think one can always find opportunities, because you know, efficient markets mean that there will be opportunities, and there will be companies that can grow fast, even in a competitive market. And we had, I think, in Poland, a lot of examples of private businesses that did very well. We have very few examples in let's say, other Eastern European, I'm not talking about Turkey, countries where private companies were really a success. But I think there were really like two cornerstones for the Polish market. One was that the regulations was in place from the very beginning, so there haven't been any major scandals like in many other markets. Two was really the creation of the Polish pension funds. I mean, without this, we probably wouldn't have this conference now.
Yeah, exactly. We are very glad that you are talking about that, because I think that during the whole conference, there was very little about the local investor base, about pension funds, and we, especially brokers, we truly believe that you have a market where you have buyers, especially, and sellers. And you have to start with, and we started in Poland with a pension fund. Ardo, question to you, if you can think about other global emerging markets which are similar to Poland or develop similarly, and maybe they are ahead of us in terms of development, and we can learn something, tell us about your experience, which was really vast. Artur was also working at Capital International for many, many years, and he is one of those Poles who left the country and couldn't come to the country because we had 13 December of 1981.
Well, thank you for inviting me here. A global investor has a choice. You look at Poland as many other markets. Now we look in Asia, China, Southeast Asia as a really place for the growth for the next 10 years. They will be very strong. Poland is coming up on a map of investors because it survived in a wonderful shape the crisis, that the only country in the European Union wasn't in recession. That tells something. But I would like to go back. It's not only that, the roots of success of Polish market, I think we need to look back much earlier, because policies, as one of our speakers said, policies will not work next year. You need to wait to benefit from the policies set today. And I remember an episode from when I was at Capital. My colleagues were working at a MSCI. The booklet were including emerging markets to MSCI indices, and he was in touch with me. He was asking me about Poland, etc. And there were essentially two criteria being included in emerging markets indices. One is how country financial markets are regulated, and second is the liquidity of the market, number of companies, market capitalization, etc. Polish market was one of the best regulated markets early in early 90s, when Leszek Paga, Wiesław Rozłucki really set up the foundation in a wonderful way that we really pay the dividends today. Because, as Tomasz mentioned, there was no scandals, the market is running smoothly, and that takes really many years that investors around the world realize, hey, that's really something that is stability, no scandals, rule of law, no corruption. Hey, that's something we need to look at.
We've been talking a lot really about what a great success story this market is, how many great things have been done over the past years, but this whole summit, I think, is also about talking about the things we can improve, so that when we meet here next year, it's again a great success story. Actually, previous panel was a good example of trying to find the weaker elements, weaker spots, things we can improve. Arthur, you've probably, I don't think there is a market you haven't looked at, emerging market at least during your career at Capital. If you look at the Polish market right now, are there any investment criteria that really catch your attention? It's something that we could improve to attract even more capital. And it's obviously, I'm not talking about valuations. Is it liquidity? Is it corporate access? Is it anything else?
Well, I think the Polish market fulfills many criteria, and I think Nadia will agree with me. It's really the rest belongs to the companies, because what we buy as investors, we buy individual companies. We don't buy, at least my style, our style was, we don't buy markets, we don't buy economies, we don't buy cycles. We try to identify companies that will progress, grow, exceed competition, do better than competition. If we buy at a reasonable price, it's even much better. But in Poland, we can find those companies. I think the access to management is better and better. Management understand the needs of fund managers. In the beginning, you were coming to the company and they were asking me, well, I'm coming for, would I like to buy the company? I mean, they didn't understand of the concept. I mean, that is really behind us. And investor relations are pretty good. They have access to CEOs. So I think the criteria are fulfilled. Now it's just a supply of a good companies, of a blue chips. That really will be the critical aspect, how Poland will develop, how companies, where the companies became not only domestic but regional. We will talk later about number of companies. It's over 700 companies listed. That's a phenomenon. It's really, at Capital, I was investing in a blue chips only. So, banks dominate the landscape, the telecoms, but now I'm looking at micro caps, and this is really a wonderful place to look for these companies. So the rest is just a due diligence and a lot of work and choosing the right companies with the right management.
Go for it.
The one, I think, I agree with what Arthur says. I think the one aspect in this market that would benefit from deeper development would be the corporate bond market. I think both for foreign investors but also for the domestic pension funds to have the ability to invest in longer liability instruments, and for the companies to have deeper ability to fund in this market in view of the funding issues we see in Europe, in the European banking system, for countries in emerging markets as a whole. I think the deepening of the corporate bond market would be a very big positive for Poland too.
Oh, I have to just on this one, because maybe this is something we can also think about the future, because Artur, you mentioned Lesław Paga, Wiesław Rozłucki about regulation and development Polish market, and we have the catalyst, and we have Ludwik Sobolewski, and maybe the corporate bond market will be about Ludwik Sobolewski, and just we want to wish you, Ludwik, that this is something that over the next few years will really boom, because also as brokers we have to live on something, and this is only thing which is growing right now. Anyway. Grzegorz, on this topic?
Yeah, just one more point on this. I think that it's important also to compare Poland to markets where liquidity is higher and is even more created by the local retail players. So there are a lot of day traders in Turkey that create a lot of liquidity, which is great for us investors because
why there are no day traders in Warsaw? Because there are no really day traders in Warsaw.